Hey everybody, hope you're having a great weekend. Jason here, Money Success and Happiness channel. And today we're going to go over 5 things that rookie beginner investors do that can basically sabotage your investing. And these are mistakes that I've made and that pretty much all investors have made, or at least most of them. Maybe not all of them, but a large percentage of these mistakes everybody has made. And these are things like you really want to look out for, because when we're new in the game, we all kind of go through the same mistakes. That's why they tell a lot of people to paper trade. In the beginning, paper trade and get good at it. But let's be honest, I'd say 99% of us, we didn't paper trade, because what do we think? Paper trading wastes money, right? Wastes time. So we don't want to waste precious time that we can make more money in the market, right? So nobody likes to paper trade. They tell you, everybody I've ever heard say, that recommends paper trading, usually they didn't do it themselves. Usually they jumped right into it. I jumped right into it, okay? I made mistakes myself. Okay, so I'm going to go over the top 5 mistakes that I made and I think a lot of people make, and things just to watch out for. We're all going to have to make mistakes on this journey ourselves, and nobody's perfect. Nobody's, not every single person, that not every single stock you invest in is going to be awesome, and things happen, but this is just things to look out for. So here we go. Number 1. Okay, the first thing that you should look out for is just be very wary of the news and like your friends, or things you hear or see online, like a hot stock. Okay, like you don't want to just jump on board on a stock just because your friends made a bunch of money, or you heard it, you saw it on Google or something that this is the latest hottest stock. Because here's the problem with that: you could catch it at the top, okay, and it's a lot more likely that it could drop, to basically correct itself than it is to go up higher. Sometimes it'll continue to go higher, and if you research it and you believe that it will go higher, go for it. But don't just jump on board because you think that everybody else is making money, so you want to make money. It's called FOMO, okay? That's the biggest thing. FOMO means fear of missing out, okay? So don't just jump into something you're not really sure, what you're doing, and just, everybody's making money, so you just jump on the bandwagon. That's always very risky, because you could jump on the bandwagon. You could be the last person to jump on the bandwagon, and you could be holding the bag at the end. Okay, so when everybody sells, there you are losing a bunch of money, and you're stuck with that stock that nobody wants anymore because it was hot yesterday, but it's not hot today. And that brings me to my second point. Okay, number 2 is just understand what you're investing in. Okay, there's a lot of stocks that are sophisticated. Like right now, all the tech stocks are really hot. So a lot of those companies are really sophisticated. Like, what do they do? They're very technical. And if you're not super internet savvy or computer savvy, it's kind of confusing. So research it. Do your homework before you put your hard-earned money. If you're gonna make money and put your hard-earned money into something, at least understand like the basics. Look over the revenue and the growth, and see what its history is, and just do the basics. It's price to earnings ratio. Just do the basics to see how it's performing. Is it meeting its expectations in revenue every quarter? Just do stuff like that. Just do the basics, just so that that you're not just buying something because somebody else told you to buy something, or you saw something on an article or something. At least kind of understand what you're investing in, because that can really hurt you, because you can invest in something that you're not sure of, and the next thing you know, something can happen and it drops drastically, and you don't even know what's going on. You don't even know what this company does, and you're not going to feel very good inside, So invest in what you know. Okay, that's actually from Warren Buffett. That's one of his main things. He says, invest in what you know. So if you understand it, then you have a lot better chance of picking the right stocks for you. Another thing is, so this kind of touches on both of those. Well, like kind of on the first one. So like, let's say you buy some hot stock. Okay, you did your research. You're pretty sure it's going to go up, and then you buy it, and then all of a sudden, it goes down. And it goes down for a day, and it goes down for 2 days, 3 days. Okay, and so you start to second guess yourself. You're thinking like, did I choose something that I'm not supposed to? Did I do something wrong? And you sell. Okay, and what happens as soon as you sell? I've did this countless times, especially in the beginning. As soon as you sell, that stock retraces back to its previous support line, and you're just kicking yourself in the ass, just thinking, what the hell did I do that for? Just for 3 days, 2-3 days of bad performance, you second guess yourself, and then all of a sudden you sell it at a loss, and then it retraces itself back to the support line, and then it breaks out to a new support, and you're sitting there looking at it, and you knew this, okay? But you have to. That's one thing in trading. You really have to learn how to control your brain not to sell, because your first instinct is when something's going down, your brain's gonna tell you sell, sell, sell. You have to sell this. I'm losing money. I have to sell. And then. That's like, you have to train yourself to not do that, and it takes a while. I'm not going to lie, we've all did it. I've did it a bunch of times, and it's a horrible feeling, because after you do it and then the stock's making money the next day, you feel horrible, So, every time I've did it, I've just took it as like a lesson. So, whenever you make mistakes like that, you got to chalk it up as a lesson. If you don't learn anything from it, then you just lost your money. But if you lose a little bit of money and you learn a valuable lesson, I think it's worth it, because you're basically learning, okay, not to do that again. And you might have to do that. Like me, I had to do it 2-3 times before finally got into my head that, okay, this stock went down today, but tomorrow, or maybe a week from now, or even 2 weeks from now, it's gonna go back up. Okay. Don't ever think because a stock goes down a little bit. If it's a solid company and you believe in that company and it's a legit company, okay, and it's a company that's been around for a while, and it makes, everybody knows it makes profits, it's going to retrace to its previous support line, okay? It is. It might not be tomorrow, the next day, but it will. Okay, so just know that. So just hold, okay? Just train yourself, just hold. Unless, if things are really getting bad and there's maybe bad news surrounding the company, or you really think it's not gonna, if it's not gonna, go back to normal, then yes, you should sell if there's something like major going on, But if it's just like the day-to-day fluctuations, just chill out and just let it ride, And I promise you, okay, 99% of the time, it's going to go back and it's going to go higher, okay, 99% of the time, just from my experience, okay? And I'm up 30% this year, okay? So, I've experienced everything in this market. I've been in it for a while now, and from my experience, it always goes back to its previous support line, unless something just like major drastic happened. Okay, so let's go to the fourth. I kind of went a little long on that one, but let's go to the fourth thing. Is just be realistic, okay? Just a lot of people think, okay, I'm gonna get into the market and I'm gonna kill it. I'm gonna turn $1,000 into $100,000 in a year. Okay, it just doesn't work like that, guys. And if you try to make it work like that, you're gonna definitely do some risky things, and you're gonna blow up your account. You're gonna lose all your money. Okay, because the odds are super against you in doing that. Okay, if you do it incorrectly, you just gotta be realistic. Okay, the main thing you got to remember is just try to beat the market every year. Okay? Now, what's the market, you ask? Okay? The market is the S&P 500. Okay? What is the S&P 500 return, you ask? 10%. Okay? 10%. If you can beat 10% every year, you're doing a lot better than most people. If you can't beat 10%, just stick your money in, SPY or VTI and just, put it on autopilot, because you'll get about 10% on average. Okay, on average a year. Okay, not every year, but on average is 10%. But if you can beat 10% a year, you're doing really good. So try to beat 10%. You're not going to get 100%, 500% a year. Okay, that's just not realistic. And if you try to do that with risky things like options and stuff like that, options aren't being used like they're supposed to be used. Okay, options are supposed to be like a hedge to protect your investment, but people just use them as like gambling, and they just are trying to turn like no money into $1 million overnight. And there's a lot more losers than there are winners in that game. Okay, I'm telling you now. Sure, every once in a while, even like in Vegas, every once in a while somebody wins, okay, and you see them win big and you want to be that guy. But the vast majority of people are going to lose all their money trying to play games like that. Okay, so try to put it in things that you've researched, you think are safe, and just try to beat the market. Even if you can only hit 15-20% a year, you're doing very well. Okay, and compound interest, just every year, trust me, your account will grow a lot faster than somebody who's just trying to get rich overnight. Okay, so what else? Here's another thing is, don't invest in because a lot of people do this in the beginning, they like penny stocks for some reason. Okay, penny stocks and companies that are about to go bankrupt. There's a big problem right now with people on Robinhood. I'm a Robinhood investor too, I get that, but people think companies that are real low are gonna give them a major return. Okay, because this stock is only $2-3, so it's gonna double, it's gonna triple. It's got a lot more chance of doubling, than a stock that costs $500 or $300 or $1,000, because it's smaller, right? Well, let me tell you guys, okay, companies that basically their stocks are almost at nothing and they're penny stocks, there's usually a reason for that. Okay, they're usually shit companies. Okay, there's usually a big problem, like lately you got Hertz. Okay, and everybody's buying Hertz. Hertz is about to go bankrupt. Okay, and the company is probably they're probably gonna lose all their money in the long run, or it's gonna go down significantly. They think, I'll buy it at a couple dollars and I'll make. It doesn't work like that. You're buying garbage. Okay, if you buy garbage, you're gonna get garbage back. Okay, it doesn't matter if it's a couple dollars, or not. Okay, stocks that are a high price, they're a high price for a reason, guys. Okay, they're high price because they're solid companies and they're good at what they do. So you have a lot better chance of buying a more expensive company or buying a piece of an expensive company to get some returns than buying something really cheap and expecting it to recover. It sounds good, like, oh yeah, I can buy something real cheap and it'll recover, but the majority of the time they don't recover, and they can go to zero and you can lose all your money. Okay, so don't play with penny stocks. One of my friends, he started with penny stocks, and right away he blew like $1,000 right away. And he's still talking about that. He just can't get over it. He's still talking about those penny stocks are holding him back from his gains. But anyway, so don't do that, okay? And just know, look, that's 5. So just know, look, we all make mistakes. If anybody on YouTube shows you their gains and they show nothing but gains and they've never lost money, they're full of shit. Okay, because we've all lost money, we've all gained money, but you just the thing is you just got to try to return more than you lose. Okay, so and just learn from your mistakes. Okay, So I hope this helps you guys. I know a lot of these things, like, you just have to go through it, you know, to really understand it. And a lot of it is you just really have to control your emotions. It's, this is like everybody says, the whole market runs off, fear and greed. Okay. And now if you can just stick to a plan, and learn how to control your emotions, you're ahead of like most of the people in the game. Okay. Like I said, don't like emotional sell, if you can learn how to do that, and just have a level head, and basically just know, once you start for a while, you're gonna see patterns of how the market works. Okay. And once you start kind of getting your head wrapped around it, and you get used to those fluctuations in price and everything, you start becoming kind of numb to it, and then you kind of understand it. So you stop doing these things more and more as you get experienced. So I hope that helps everybody. If you guys have any questions or anything, please like and subscribe to my channel, and I'm always here to help. I'm on my phone like 24 hours a day, so if you guys have any questions or anything, let me know. Let me know in the comments if there's anything that you guys have did in the past that I missed, that maybe I should have added in this video. We can compare stories and stuff. All right, well, I hope everybody has a good weekend, and take care of yourselves out there, and hope you liked the video. All right, have a good one. Bye.